Rise and Grind, Trading Family. It's Friday, May 29th, and I'm sitting here staring at three things that cannot all be true at the same time. The Fed is screaming hawkish. The artificial intelligence trade is screaming higher. And the peace premium everyone is pricing in? It's built on air. Welcome to Trading Floor.
Quick reminder before we dive in. Nothing we say on this show is financial advice. We're two guys talking markets, not your portfolio manager. Do your own work.
All right, TV. Let's start with the story that broke between yesterday and today. Personal consumption expenditures, CC, came in at 3.8%. Hot number. Market yawned. Then we get Jeff Schmidt and Alberto Musalem on the same morning, same message. Inflation is not transitory, and the probability of a rate hike is above zero. That's coordinated messaging from Federal Reserve, the Fed, officials.
It is coordinated, and that's the part retail traders miss. The Federal Reserve doesn't do accidental messaging. When two governors speak on the same day with the same tone, that's a signal. And the signal is, we are watching inflation reaccelerate, and we are willing to act.
So what does the guy holding Advanced Micro Devices, ticker AMD, and Alphabet, ticker GOGL, do with that information? Because my TFT algo is sitting here looking at the data and saying volatility is compressing into a decision point. The algo is not confident enough to add exposure right now.
My Wave Trader algo is scanning roughly 300 signals per session. Today, it took zero new entries. That's not common. The Wave Trader algo doesn't sit out unless the signal-to-noise ratio is degraded. And right now, the noise coming from the Fed coordination is overwhelming the price data.
That's the setup. Now, let's talk about why nobody cares. Dell Technologies, ticker DEL, up roughly 40% on earnings. Snowflake, ticker SNOW, up roughly 35%. Microsoft, ticker MSFT, releasing a new coding model next week. The artificial intelligence trade is on a tear, and it does not care about Jerome Powell or Jeff Schmidt or any of it.
And that's the tension that defines this entire episode. You have two incompatible narratives. Narrative 1, inflation is reaccelerating, the Fed is coordinated and hawkish, and rates could go higher. Narrative 2, artificial intelligence. Artificial intelligence is the most transformative technology since the internet, and cash flows are so strong that cost of capital doesn't matter.
Something has to give. My gut call account is watching this from the sideline. I'm all cash except for one order I'll get to later. But the question TB and I have been debating is, what breaks first? Does the Fed talk kill the artificial intelligence rally, or does the artificial intelligence rally force the Fed to back off?
I think the answer is neither, at least not directly. The thing that breaks first is a third story that everyone is ignoring. And that's what I want to spend time on because I believe it's the most mispriced data set in the entire market right now.
You're talking about the geopolitical divergence.
Exactly. The market is pricing peace. Japan's Nikkei and South Korea's Kospi are at record highs. Oil is dipping on ceasefire optimism. The market narrative is the conflict is winding down, tensions are easing, we can go back to risk. On. That's the peace premium.
And reality is saying the exact opposite. Secretary Bessent's red lines on uranium surrender and Strait of Hormuz access have not changed 1 inch. The data that gets me, the tentative deal, is fragile. President Trump hasn't signed off, and Vice President Vance says language is still going back and forth. This ceasefire is not a done deal.
That's the strongest piece of evidence for the argument that the market is wrong about peace. Prediction markets are sentiment. Actual political statements from the administration are the real guide. And when Bessent says negotiations are multifaceted and nothing is on the table until Iran turns over enriched uranium, that's a high bar. The peace premium may be premature.
The transmission mechanism is already working. Aluminum premiums are at record highs. That's a direct supply chain impact. If the ceasefire narrative cracks over this weekend, oil rips higher, inflation gets another leg up. And suddenly, the Federal Reserve has validation to stay hawkish.
Let me lay out the domino logic because this is the call for today. Domino 1, the ceasefire narrative cracks. Could be a headline over the weekend. Any new red line crossed, anything that breaks the peace story. Domino 2, oil rips higher. Domino 3, inflation gets another leg up. Domino 4, the Federal Reserve gets covered to stay hawkish. Domino 5, the artificial intelligence trade, which has been ignoring all of this, has to pay attention.
And that's where the artificial intelligence rally gets hit. Not by the Fed directly, by the geopolitical story feeding back into inflation, feeding back into rates, and finally reaching the valuation multiple that the artificial intelligence names are trading at.
That's the sequence. And I want to be clear, I'm not saying it happens today, but I am saying the peace premium is the most fragile of the three narratives. The Fed coordination story is real, but the market has already discounted it. The artificial intelligence trade is real, but it's supported by actual earnings beats. The geopolitical peace premium, that's built on hope. And hope is the worst foundation in this business.
All right, let's bring it down to ground level. Because while we're talking about oil and aluminum premiums, there's a data point that proves the transmission mechanism is already working today. Costco Wholesale, ticker COST, is reporting record gas price-driven volume weeks.
That's the real economy segment, and it's mandatory today. Record gas prices drove record volume at Costco. That sounds like a good thing. More customers, more revenue. But the driver is pain at the pump. Consumers are spending more on fuel, which means they have less for discretionary purchases.
Right. The tariff refund theme is running across retail right now. Stores are giving customers money back on tariffs. That's not a sign of a healthy consumer. That's a sign that margins are being squeezed and retailers are trying to keep traffic. And the Associated Press data shows consumer spending power is eroding.
Nobody wants to talk about the stagflation thread. Stagflation, not a word Wall Street likes because it doesn't fit the artificial intelligence rally narrative. But you have inflation running above 3%, growth slowing, and the consumer showing real signs of strain. That's the textbook definition.
And here's the connection that ties the whole episode together. Costco gets volume from high gas prices. The energy sector wins from the supply squeeze. The artificial intelligence trade wins. But the guy filling up his tank and buying groceries? He's getting squeezed from both sides.
And that squeeze is the concrete evidence that the geopolitical story is already feeding into the economy. When you say the peace premium breaks first, you're not guessing. The data already shows pressure building. The market is just late to price it.
Let me give you my personal posture, because I want the trading family to see how this maps to actual decisions. My paper account, my gut call book, is all cash except one order that I queued yesterday. I'm long the United States Oil Fund, ticker USO. $1,500 size. Entry at market. Stop at $88. Target at $95.
What's the thesis?
The thesis is exactly what we just laid out. The geopolitical peace premium is overpriced. I made that call before the latest headlines. The thesis is actually stronger now. If the ceasefire narrative cracks, oil rips. And USO, the oil fund, captures that move. My real account is watching Advanced Micro Devices, ticker AMD. Entry at $492. Looking real nice.
I'm long Advanced Micro Devices, ticker AMD, from May 27th at $495. It's now at $519. Stop at $475. Letting it run. The rotation is widening. If the semiconductor rotation continues, Advanced Micro Devices could see follow-through next week.
What about your Wave Trader algo? Any signals?
The Wave Trader algo is carrying 12 positions. Most are green. Nothing forced. It scanned 300 signals and took 0 new entries today. That's discipline. When the data is fractured, the best trade is no trade.
And that's where I am too. I'm not adding anything new today. Too fractured. I'd rather have one pending order I believe in than 3 positions I'm not sure about. The artificial intelligence trade is screaming higher. The Fed is screaming hawkish. And the geopolitical story is screaming that something is about to break. All 3 cannot be right.
Let's land the plane on the concrete takeaway. The call for today and for this weekend is the geopolitical peace premium breaks first. Not necessarily today. Could be this weekend, could be next week. But the tentative deal remains unsigned, red lines are firm, and aluminum premiums are at records. That's a fragile ceasefire narrative.
And when it breaks, you know the dominoes. Oil rips. Inflation gets another leg. The Federal Reserve gets cover to stay hawkish. And the artificial intelligence trade that was ignoring everything has to reprice. That's the sequence.
3 things to watch this weekend. Number 1, any headline out of the Middle East regarding the Iran talks. If the deal stalls or a new red line is crossed, Monday opens with a gap. Number 2, oil prices. If crude closes the week above $85, the peace premium is already cracking. Number 3, the United States dollar. If the dollar strengthens on safe haven flows, that's the first sign that the market is repricing the geopolitical risk.
And one more for the Costco crowd. Watch consumer discretionary names on Monday. If the XLI, the consumer discretionary sector ETF, opens weak while energy and defense open strong, the rotation is confirming the thesis. The data is already showing pressure. The market is just late to price it.
That's the show. The 3 narratives cannot all be true. Our call is the peace premium breaks first. Watch the weekend headlines. Watch oil. Watch the dollar.
Trading family, that's your Friday. Stay sharp. Don't chase. And if you're sitting on cash, there's no shame in waiting for the setup. I'm Wildcard. That's TB. We'll see you Monday.
Trade safe.
Peace.